Yo, what is good, family? Hope you all are having an amazing day. Today we're gonna break down a loss that we had on the Eurusd on the Frankfurt Open this last Thursday. Basically, you know that all the trades that I take on Eurusd with this strategy with the M5R method is on the Frankfurt Open. I like it because it's the first session of the day. I do it as soon as I wake up, like 1 hour and a half after I wake up. I just jump into the charts for the Frankfurt Open and I get it done. But you're going to still apply this at the London Open, New York Open for Eurusd, or in other sessions such as Sydney Open or Tokyo Open, obviously with other pairs. With this being said, today we're going to show a loss, alright? We're not uploading frequently the Eurusd trades, only Bitcoin, but I also want you guys to see more losses when it comes to the strategy, because for example this week was massive with Bitcoin. We had 4-1, and I don't want you guys to see only wins. I want you guys to see also losses. This week, for example, was weaker for Eurusd and way better for Bitcoin. So if you trade two pairs, they will eventually balance out once to each other. Obviously other weeks it will have super positive for both pairs, other weeks will be super negative for those pairs, for both pairs. So it will rely also on your risk management. Obviously if you trade more than one pair, you should be also risking less per trade, because at the end of the day your max daily loss is automatically potentially doubling if you don't reduce risk, because essentially you're doubling the amount of trades you're taking if you trade suddenly two pairs instead of just one. So it always depends on how many trades you take, on how many pairs you trade, and how many sessions on those pairs you trade. Everything I recommend always in the beginning is only trading one pair, one session a day, and effectively you're only taking one trade a day. That's the best way if you're new, and what you should be focusing on. In that way you will be able to get better with that pair, get better with that session, take only one trade, and eventually risk more potentially on that trade as soon as you get more comfortable. So let's get back to this setup, because this was perfectly valid. You will have losses that are extremely valid. In fact, all the losses that you have in your day-to-day basis or on a weekly basis, those losses should be from valid trades. It means that when you have a loss, you don't have to say, oh, what's wrong with this loss? What happened for this trade to hit a loss? Because if you're finding things that are not in sync with your strategy for those losses, means that you're executing very poorly. I mean, if you execute a trade, you don't know if that's a win or a loss. You have to make sure that that trade follows 100% your execution system. If you think you're executing flawlessly, then you hit the loss. You overthink about the setup, you review the setup, and then you say, oh, I find this characteristic about this S scenario that is not following my system, and that's why I hit invalidation. Then you're executing very poorly. You don't have to find any reason. It is just a loss. The win rate of the strategy is 70% because 30% of the times you lose, right? So obviously you have to go over your losses. I'm not saying you don't have to go over your losses. If you go over a loss and you clearly see that you fucked it up at some point, then that's fantastic. That's perfect. You just note it on your journal as a not valid loss. You make sure what was the mistake, why you did make the mistake, and you don't make it again. That's how you correct yourself. That's how you rebalance the way that you are executing on the market. Because if you don't even go over your, not losses, but if you don't go over your mistakes, you will keep making the mistakes over and over. Why I don't say mistakes and losses in the same sentence? Because you can have wins that are not valid. The same way you go over your losses, you have to go over your wins. Because sometimes you don't even go over your wins, because this is funny. People in the beginning say, oh, I hit a loss. Something must be wrong with this loss. But then when they hit a win, nothing is wrong with the win, never, right? They just hit the win. They don't care if they executed perfectly, flawlessly the system, or if they had some mistake at some point, or even they know they made some mistake, but they just ignore it because it was eventually a win. It doesn't go anywhere, right? You have to always, mostly in the beginning, you have to go over your losses and also over your wins. So you make sure that every single trade, doesn't matter if that's a win or a loss, it's executed flawlessly following the setup and following the system. That's what you have to make sure every time. I have a lot of information to break down about this, so I will keep it for future videos, but I just want to put the seed in your mind of always going over the wins and the losses, making sure that every single trade, doesn't matter if it is a win or a loss, always follows the system mechanically, systematically, flawlessly. And if it is a mistake on a trade, doesn't matter again if it's a win or a loss, you just make sure why you did the mistake and how you can make sure you don't have the mistake again. Alright, so let's go over the breakdown. Alright, I usually talk a lot on the sessions, but not on the YouTube videos. Today, you guys had some luck, but I'm slowing down. Alright, so we have 8 a.m. and basically we have the same question as always: where are we coming from? Some people will say, no, we're coming from all of this bearish structure, but in the beginning of the session, my question is, all right, where are we coming from? We're coming from here. Why? Because market right here is making a significant low. Therefore, this is my last bearish range. I see internal structures over here. So that's the first part of the structure that I will always break down. So we have a high, low, lower high, lower low, lower high, lower low, lower high, lower low. Factor this in. This candle is not breaking previous candle's low, right? So the movement that price is making right here is bearish, bullish, bearish, and then again bullish, lower high, lower low. So now we are about to start the Frankfurt Open. We do the same as always. We mark up the last high, boom, lower high. Therefore, we will go for a bullish break of a structure. Now let's mark up the last low. Some people will say, is this one? It's not the last low. Because is this a lower low? No, because you just have one impulse. Is this a higher low? No, because you don't have a higher high. You don't have a high higher than this high. Therefore, this is literally nothing. Therefore, the next level is this one. This is a lower low. Therefore, you're going to look for a bearish rule of the third impulse. Now, this bearish rule of the third impulse, you have to make sure if you have less than 3 impulses, specifically if you have 2 impulses and 2 pullbacks. Now obviously right here we have 1, 2, 3, 4, 5. You will be getting an entry to the 6th impulse, so it's not valid. But also this low makes a lower low, therefore this structure is not even correct to keep in mind. Now let's remove this, because now the next question is, okay, we broke this low. Let's zoom out and see if in the bigger structure we have something worth taking. We have a high, higher low, higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. 1, 2, 3, 4 impulses. Fantastic. Now we have 4 impulses. We will be getting an entry to the 5th impulse. Therefore, this is not even valid anyways. The only setup that we have as potential idea is this one, this bullish break off structure. We set up the buy stop and candle of the open, boom, smash everything. Now, sometimes will happen. The win will be hit 3 minutes after or 5 minutes after. If it's a loss, it can be hit 5 minutes after, 5 hours after, or 1 minute after. Alright, it doesn't really matter. A loss is a loss, a win is a win. This is a perfect example of a perfectly looking trade, perfectly valid trade, but eventually hits a loss. It is what it is. Rules to the game, play the probabilities. So with this being said, family, this is everything. This is the breakdown. Literally nothing else. I mean, we cannot go over a losing setup again and again and again, because a valid trade is a valid trade. That's the lesson of the day. See you in the next ones. Let's get it.